现在的美股啊，只能用如日中天来形容了啊！刚过去的这个一季度的财报季啊，出来的几个数据啊，简直就是让人头皮发麻。标普500啊，一季度的整体的企业盈利同比暴增 27.7%， 直接就创下了2021年底以来的最高的纪录。那要知道，在这个财报季开始以前呢，华尔街的分析师啊预测的增速是 13%， 那实际出来的结果呢，直接翻了1倍还多。成分股里面啊，有高达 84% 的公司企业实际的每股的收益超出了市场的预期，也就是赚的钱超出了市场的预期。整个大盘的营业收入也涨了 11.4%， 同样是2022年以来的新高。还有纳指啊，一个多月一口气从23000点飙到了快3万点，尤其是半导体行业和这个芯片行业啊，营收同比暴增了 52%， 在所有行业里面排第一。整个半导体市场全年的营收预测啊，就直接就被拉到了9750亿美元，将近1万亿美金。那在这个中间呢，当然最猛的啊还是英伟达，他在5月20号刚刚发布了他最新的这个财报，看完呢只能用恐怖2个字来形容。单季度总营收816亿美元，同比飙升 85%， 其中最核心的数据中心业务啊，营收752亿，同比暴增 92%。更夸张的是啊，它一个季度的净利润就有583亿美元，毛利率 75%， 这赚钱的速度啊，印钞机都要开始冒烟了。还有给 AI 芯片做代工的台积电啊，一季度的净利润大涨 58%， 已经连续4个季度啊创下了历史新高。那现在呢，很多的科技股啊，虽然看着位置挺高的，但是因为有强悍的这个利润啊在后面顶着，它的市盈率呢，也就是 PE 啊，反倒是降下来了，股票还显得便宜了。那这也是美股啊从3月底以来一直在疯涨的核心逻辑。所以呢，现在科技股啊有一种普天同庆的感觉啊，只要买了科技股的啊，大家都在赚钱。但是呢，每当市场任何市场到了这种狂热的时候，风险啊其实也在慢慢的累积。想发财，那我们就要有一点这个逆周期的思维。今天的视频里面呢啊，我觉得最有价值的内容就是汤姆里给出了目前市场面临的3个短期的考验。第一个啊，就是这个通胀的压力。那通胀啊，对美国人来说是天大的事啊。最近中东那边不太平啊，所以这个油价大涨，物价一传导，通胀的压力啊，立马就上来了。接下来就要看这个美联储它接下来会怎么应对。第二个啊，就是这个美债的这个收益率啊，又飙起来了。那美债收益率一走高啊，就会有很多的资金，它就会去赚这个无风险的这个高利息，这个肯定对高估值的这个科技股啊就形成了压力。那第三个啊，就是接下来啊很重要的，就是美股会迎来一个 IPO 的高峰。短期内啊，有一堆的这个新股要集中的上市，这其中啊就包括现在市场上大热的一些公司啊，像这个 SpaceX 啊，估值 1.75 万亿到2万亿美金，Anthropic 啊，估值3800亿美金啊，这还有后面还有一堆估值1000亿美金的 IPO。那这呢，其实说白了啊，这就是熬了好多年的这个风投机构啊，这些投资人他们要变现啊，要抛售，那这肯定就会带来巨大的抛盘，市场上的资金呢肯定就会被分流，所以呢，这就是整个的这个市场啊，它面临的一个短期的3大风险。那这3个风险呢，它其实不光是对美股啊，对加密货币啊同样是适用的。因为现在这个币圈和美股的这个相关性啊，比以前高多了，尤其是币圈的领头羊比特币。所以呢啊，我们做加密货币投资的朋友啊，其实也需要高度关注这个。那汤姆里呢，他同时也是这个以太坊财富公司 Bitmain 的主席，所以呢，他的这个分析啊，肯定啊也是把这个币圈考虑进去了。所以我们还是有必要听一听他是怎么分析当前的这个市场的，以及他是怎么看待后面的市场的走势的。那在视频里面呢，汤姆里也给出了就是我们重点需要关注的这个板块和标的都是什么。 OK， 看视频。
This has just gotten a little bit out of hand. You agree?
Well, first of all, I wasn't disappointed with the summit because I didn't expect much of anything. I didn't really believe that there was going to be some sort of amazing deal coming out of it. And we are in an earnings-led melt-up. The fundamentals are definitely there for what's been happening, and so valuation multiples haven't really gotten all that stretched relative to earnings. And I mean, that's one of the reasons we came back so strongly since the bottom on March 30th, as investors suddenly realized that the PE had come down to a large extent because E had gone up to a record high and stocks looked really cheap. So, I think we have to kind of take out the bumps in the market, and I think the trend is still very much intact.
But you heard what the professor said about the idea that investors are making this bet that this earnings ramp is going to go from here to infinity. I mean, you've been thinking about this. Didn't you call this like the Buzz Lightyear market or something like that the other day?
I have this Buzz Lightyear theory of to infinity and beyond.
Well, are we making a mistake thinking what has traditionally, as he said, been a cyclical part of the economy is somehow secular now, and we're just going to project this out from here to 20 years from now?
I think the AI may be a bigger deal than people understand, and I think the stock market's kind of hinting at it. I think, economists usually view the economy as having three main resources: land, capital, and labor. I think data has become a fourth factor of production. And we've all been collecting data. It's been stored away, and we really haven't squeezed it for all it's worth. And that's what AI is doing. It's the digital revolution. It started in the 1960s, and we've accomplished an amazing ability to process a huge amount of data really quickly, really cheaply. And as we continue to do that, guess what? We create more data. There'll be never a shortage of data.
Tom, how do you assess this?
Well, I agree that the U.S. is benefiting the next 3 years, maybe even 10, 20 years from its leadership in AI. But I kind of agree with Professor Siegel that, if I look at the next 3 months, so not 3 years, I do think three tests are emerging for the stock market. One is, of course, how is the Fed going to react to both the underlying inflation risks? The second is, the market doesn't really like when inflation is a concern and yields are rising, and I do think we are seeing it now in PPI. I think there is in the pipeline a lot of inflation, not structural, but just inflation shock, but also energy shortage. And the third, of course, is I think we have a lot of IPO, and that's a lot of supply. So I think we're going to face some tests later this summer. So I think the risk reward is still great for tech, but I'm not sure about the broader market.
How would you respond to that? I mean, the market, some have suggested, has been whistling past the graveyard of this tremendous move that we've seen in oil, and now you have yields joining it, and you've had some of the inflation data this week get a little alarming. Have we been doing just that, ignoring what's right in front of our face, and there's going to be a comeuppance as a result?
Tom's view is very plausible, that we may have a stretch here of a few weeks, maybe a few months, where the market consolidates. We just had a pretty significant pullback in the market from the beginning of the year, basically, really from October of 2025, when the big cap stocks had a really quite a significant sell-off. And so, we've already had the pullback. I guess people would like to have another opportunities to buy here. But yeah, I mean, there's still this issue of the bond yield, but I think the bond yield is reflecting a normalization of the economy.
I know, but the parabolic nature of this move, SMH up 6 straight weeks.
Yeah.
We could end that this week, but nonetheless, up 6 straight. The DRAM ETF began this week with $6.25 billion in assets under management. Finished yesterday with $9.5 billion. It only had $77 billion a month ago. NVIDIA up 7 straight days. The Qs have been up so much they need to fall 12.5% just to get back to the 50-day.
And all of that was triggered by the first quarter earnings season, which was phenomenal. As Professor Siegel said, I don't think any of us recall a situation where earnings have been surging in such a way other than coming out of a recession. So the fundamentals are good. Look, I think the bond market's reacting to better than expected economic growth. It does look as though the economy is going to be showing something like 3 to 4% growth in the second quarter. It was weaker than that in the fourth and the first quarter, and some of that had to do with the government shutdown, then some really cold weather. So I think we're going to be very pleasantly surprised by the strength of the economy and that's what will keep the market going.
I feel like, Tom, you painted a bit of a conundrum for you, perhaps, and maybe other investors, when you said, yes, I still am bullish on the AI trade, but I don't really like other parts of the market in the environment that we could be in with inflation in the pipeline, as you said, and shocks in inflation, nothing structural, but nonetheless concerning, the rise in oil, the backup in yields. But then if I sit back and I say, well, how can I lean in now to parabolic moves that have already taken place? And at the same time, I don't like any of these other areas of the market because I agree with Tom. Then what in the world do I do?
All right. So, Scott, I'm going to say something that might make the audience think I'm puzzling, but the move in DRAM, in my opinion, is actually somewhat defensive, because we know that if you're worried about inflation and petroleum shortage, there's even bigger shortages in memory. So, like, people are buying what's going to work even if the macro environment gets tough. And I think that's why it makes sense for semis and DRAM to still do really well. And so I think that this pullback is going to be viable there. But to me, if someone's trying to make a bigger bet on tech, I think the really attractive risk reward is still Mag 7 and software. And Bill Ackman's buy of Microsoft really reinforces it. That's why software is actually still among our top picks right now.
Well, Ed, last and quick, you're sticking with 8250, your S&P target for calendar 26?
I am, and 10,000 by the end of the decade.
All right. We'll see you again soon. Thanks,
Absolutely.
Ed. Thank you, Tom. We'll talk to you soon.